Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. This is what you're going to need to know before you go and start trading today. So without further ado, let's get on with it. What I'm going to do is usually talk about the economic data. We'll run through the markets and then see what the opportunities are given to us today. All right, something to talk about. We all know last week's unemployment number came out and knocked it out of the park. We were expecting 100,000 hires, came in at 467,000 hires. And not only that, we also saw the last month number get revised up massively from 200,000 to almost 500, a little over 500,000. Unemployment rate did uptick to 4%. So one of the things we're seeing is that labor force participation rate start to increase. Now that's the number I've been talking about. Some of those folks that were tired of looking for a job may have fallen off of that labor force participation rate. That means they aren't part of the statistic, folks. So that wasn't showing up. It was skewing everything a little bit there. So now we're starting to see those people really start to come back into the labor force. That's going to start driving up the rate there. Now in the United States here, we got a couple of things going on for us. We've got all the Fed governors talking now that we've seen that economic data point come out. Every Fed governor talking about raising interest rates. We haven't really seen that start to show up in the markets as of right now. We're seeing some inflationary pressures show up in crude oil here. As you can see, we're back into the 90s again as of last week, pushing higher there. That's driving prices of crude oil higher. Obviously, with the price of crude oil going higher, that's not really what the byproducts, polypropylene, things that are going into plastics, car oil, all of those things, heating oil right now in the middle of the winter, starting to see all of those prices really jack up here. And that is all a byproduct of crude oil. Fracking operations being shut down, having a tough time getting those things going back up again. Some plant in Texas to help make plastics burnt up. We're seeing plastic prices jack through the roof. Most folks aren't really talking about that, but that is something that is really moving higher. Some plastics like PVC have moved up about 50% in the last probably 8-9 months here. So it's something we've been hearing a lot about: wood, lumber, and metals like copper. Well, polypropylene is another one that really people aren't talking about, and that is hurting folks a lot right now, especially in the building industry. So crude oil moving a little bit higher here. We talked about the economic data point from unemployment number. Well, that's going to make folks believe that interest rates are going to move higher. We're already hearing the Fed governors talking about maybe some folks are even saying 7 interest rate hikes next year. Well, if that's true, folks, we're looking at the price of bonds right now. As those price of the bonds goes down, that means interest rates are going up. Well, what do we really care about in our portfolio? Price. And that price is going to be reflective of a decreasing value in your portfolio. I've talked about this time and time again, folks. Covered calls in your portfolio around bonds for the last 1.5 to 2 years is what you needed to be doing in order to lower that overall cost basis for this type of move in the bonds. Now, Bitcoin's starting to finally make a move higher here. I was expecting this move to start happening a little bit earlier. We were talking about this. Hello, how you doing? Last week and the weeks before, that inflationary pressure should drive Bitcoin higher along with gold. Now, we weren't seeing either one of those making a move as of last week, but now that the taper tantrum is going to start happening, we're actually going to be looking at an interest rate hike tantrum here going forward with the equities and the bonds as we start seeing these levers and pulleys start to happen. I don't think that we've really seen the taper tantrum happen right now. We're talking about higher interest rates. The more these interest rates are expected to start increasing, I think we'll see more of a tantrum in the overall markets here, which would give a lift to Bitcoin and gold. Now, we were talking about with our trend channel and gold, this is when I was expecting us to make those moves in the precious metals here. Yeah, we sold off a little bit, got a nice move. This is a little bit of a odd sell-off here. I was expecting us to start trudging higher inside of this trend channel. Well, we've broken outside of it, and I've got my tight line here for the more aggressive trader, a little bit looser line here for a newer trader. Well, you can see we are trending along that trend channel on the outside of it. Now, remember, as it acts as any of these support and resistances come into fruition, it acts as a support on the way down and will act as a resistance on the way up. So we're seeing this market bump up against the resistance now and hasn't been able to pierce back into this trend channel. I do expect that to happen as folks are going to be more and more worried about non-transitory inflation here. We've been talking about transitory inflation, but you've heard me just recently talk about even byproducts of the building a house are going up, right? Well, lumber we see fluctuate quite a bit. We see metals fluctuate quite a bit. Well, the thing we don't really see are some of these hard products like plastic. When they start getting that inflationary pressure, we don't really see those folks really pull back on that so much. So those are some of the inflationary pressures we could see here stay for a while, because plastic prices, folks, as long as we've known, have not really moved that much. VIX is coming off a little bit. We're starting to see a bit of a bounce here. I don't know if it's a dead cat bounce or if we're just going to start migrating back to these points of control and kind of settling down there. You can see the NASDAQ blew by it to the downside. I've got a lot of different types of trend channels going on here, trying to decide where we're going to end up settling down. It looks to me, folks, that we're kind of right there at the point of control where the most time and volume has been spent, probably settled down there. Yeah. Time and volume for the E-mini S&Ps and the Dow Jones Industrial Average a little bit lower than where we're seeing there, a little bit lower than where we currently are from the trading action. NASDAQ's blown through that to the downside. Well, we talked about that correction being a little bit more aggressive in the tech sector because we saw some of those high flyers during the pandemic really start to make a move. That was mostly in that tech sector. So that correction was expected to be a little bit more exacerbated to the downside. Now, E-mini S&P does have the point of control just slightly below, but at the end of the day, they've had a little bit of a correction. I think we'll do a little consolidating here throughout this week, as we don't really have some of the best economic data coming out this weekend or this week, more towards the end of the week where we get CPI and some of that stuff. But for the most part, I think it's going to be listening to talking heads and trying to discern where we're going to get going here in the future. Having said that, my portfolio is pretty slight right now. Don't have a whole lot added. I'm not going to add a ton right now because I'm a little bit confused as to the directional move here. It's going to be all about the levers and pulleys that we're hearing about in the market. So stay on your toes this week and be reactionary. We've got a lot of economic data, a lot of equity earnings coming out this week. So that is going to be a main driver of the markets here going forward. We've seen the retail sector not do so great. The banks probably will do a little bit better going through this type of environment. So they've held up very well. But the rest of the market is going to be on earnings for the most part, since we don't have a whole lot of economic data. All right, that's all I got for you guys. Hope you have a great trading week. If I find anything, I'll pop in here unannounced. So make sure you guys are subscribing and hitting that little bell so that you get notifications when I come in unannounced. All right. Other than that, if you can't take that, take it easy.